Hi boys and girls, it's Shane and I've got a whole stack of credit cards. I want to make sure I don't accidentally show you any of my numbers. All of these and a lot more, enough to make Dave Ramsey cry or have nightmares. But I have them for the purpose of maintaining good credit, and that is good for your financial success. Some of you may have bad credit. This video is to help you and maybe set a New Year's resolution of how to fix your credit. I'm going to give you some basic tips anybody can do. And I want you to think of this like a game. I know with credit it doesn't feel like a game, but think of it like a game. If you learn the rules to a game, sometimes the game can be more fun and you can do a lot better at it than you think. It is possible to fix a lot of your credit and make some money doing it, and then have access to money so you can buy houses or buy maybe your first home if you've never bought a home before. So this video may help you. Let's get to it. So we'll start by going to annualcreditreport.com. Make sure to go exactly to this site. There are many lookalikes. This site, and you can do this from a desktop or another, will let you request your free credit reports. You can just click this link, fill out these forms, and it will give you a report of all the things that are on your credit that may be bad marks, and you can start to address those. So how do we address the credit problems? Well, it's very simple, really. Once you get your report, it's going to show what's on your debt history. You can send a message to those companies and say, hey, I want to pay my debt. I don't have the funds to pay the whole amount, but how much could I pay and settle for? And you may be surprised, some of them will settle for pennies on the dollar from what was originally owed because they bought the debt for pennies on the dollar. So if you owe $1,000, you might get away with just a couple $100 being sent to them as a settlement. It may be $500, you don't know. But once you get a settlement from them in writing, pay it and get it off of that credit report as quick as possible. If nothing comes up on your credit report, if there's nothing bad, then you can go ahead and go to the next step. You need to start by getting some good beginner credit cards for people with low credit. The two I recommend right now are the Open Sky card. This is a secured card. If you don't have anything bad on your credit report, or even with some bad things on your credit report, you can oftentimes get a Open Sky card. It'll involve giving them a few $100s, and they'll give you a credit card with that amount back that you can use. You may try the Indigo MasterCard. So look up Indigo MasterCard, try signing up for that one, see if you can get approved. Both of these will approve a lot of folks, even people with bad credit. They're made to help you build credit. That is their purpose, and that will help you with it. Now, once you're making credit card payments, we can start looking at the rules to this game. So the rules are three major ones. If you do these three, your credit score is going to be amazing. One is your on-time payment ratio, okay? This is a ratio, meaning there are two things compared: the number of on-time payments versus the number of late payments. So we're going to create a scenario where you have one late payment. If you have one credit card and you take that one credit card and you make a late payment on it this year, through that year you're going to have 12 payments made. One late payment is almost 10%. When a bank pulls your numbers and they say, wow, Shane is late 10% of the time on his payments, banks aren't going to want to lend to you. You're not going to get loans. Your credit score is going to be in the toilet. Why? Because you have a late payment. But the late payment isn't the problem. It's the ratio. Again, this is a game. So if instead of having one credit card, you have 10 credit cards, now you have 120 payments this year, and you're late on one of them. Now it's less than 1% of your payments are late. Shane's a great guy. Less than 1% of his payments are late. We'll give him a loan. Like, his credit is awesome, and it's the same late payment. The difference is he increased the number of credit cards he had and made sure he made payments on them every single month on time, and that sufficed to make that rule number one much better. Rule number two is going to be very similar, okay? This is a ratio of your credit to your credit utilization. That means the more credit you use of what you have available, the worse your credit score will be. Same scenario. Let's say you have $1,000 in credit card debt. Okay, you have a $1,200 credit limit card. Banks look at you, you're a terrible person. You do not need money. You're not good with money because you have $1,000 in debt. And you may think it's the $1,000 that's the problem, but it's not. It's the one credit card that's the problem. It's one $1,200 limit credit card. You're using almost 100% of your utilization. As far as the banks go, you're terrible. So instead, you have 10 credit cards, all of them with the same $1,200 limit. Now you have $12,000 available credit, and you have the same $1,000 used on those credit cards, just divided among all of them, $100 on each. And now you're using less than 10% of your available credit. You're amazing. We can sign you up for any credit card you want, sir. Why? Because we changed the number of credit cards we had from 1 to 10. That's literally all we change, and suddenly your credit score is going to shoot up. Okay? Now, it's important with those extra credit cards and the extra available credit, you don't go on vacation, you don't go on spending sprees, you don't go Christmas shopping like mad. It's important that you stay controlled on it. So what I recommend is keep something that's automatically charged every month on each one of those. So maybe your phone bill, that's going to be consistent, maybe $100 every month, goes to this credit card, then set the credit card to automatically pay, and don't use the credit card for anything else. Every month you'll have an on-time payment and your utilization will stay low. That's going to help you greatly. Now the third rule, and this one is a little bit more challenging because it involves time. How long have you had your credit cards? How long have you had your credit accounts open? The longer they've been open, the better your score will be. So the soonest time to fix this is today. 5 years from now, your past or your future self is going to thank you for opening all these accounts today. The sooner you open several accounts, the sooner they can start aging, and that's going to make a big difference. So 2 other rules, the 4th and the 5th rule, these have a very minor impact. The number of inquiries you've had on your account, which is the number of times you've tried signing up for credit and it pulls, and that one has a very short-lived effect, so just over a few months. If you pull some credit today, it's going to go down, but in a couple months it's going to go back up. And the final one, and this one has a very small impact as well, is the types of credit. So when you have nothing but credit cards, that's only one type of credit. If you have a car loan and credit cards, that's 2 types. If you have a car loan, a home loan, and credit cards, that's 3 types. If you have a personal loan from your bank, that's 4 types. The more types of credit, the higher your score will get.